Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by Philip Lee, one of Ireland's fastest growing corporate law firms and expert advisors at the heart of the Dublin and London startup, fintech, and crypto communities. This week, Eoin Fitzgerald and I take a look at what started out as a student lending platform in SoFi, now becoming a full-service digital finance player. We also take a look at Circle's new SPAC deal in the context of stablecoins. Then we riff on advertising and naming rights in crypto before rounding out with a long-term view on what Apple could be up to with Stripe. All right here on Money Never Sleeps. Hey, Eoin.
Hey, Pete. How you doing, buddy?
Good. How are you?
Another late night episode.
Another.
Oh no, wait!
I'm
on a day off today. I'm on a day off today. It's fine.
Of course you are.
Another lunchtime session.
So much going on. We just had to jump in to cover all of it. It's absolutely nuts out there right now.
There is. Do you know what? There's loads. There's so many different stories. And it's trying to find ones that are relevant and haven't been covered then loads, with commentary and stuff.
And everybody gives their take on it because we're in this. Everyone's on Substack. Everyone's got a newsletter. And people share so many brilliant ideas and brilliant insights on what's happening around the world.
I don't have the time to get through all of them. Like, there's great ones from Packy McCormack and Mario de Gabriel, and there's so many great ones which are deep dives that I haven't over a course of a week. By the time I get around to it, it's the following week is out.
Yep.
Yeah.
So. I know. And I just heard about a new one called Milk Road, everything going on in crypto that Lex Sokolin pointed out. So.
Oh, cool.
Going to start checking that one out, but see, you kind of have to say which one is it going to replace that you read rather than which one.
I know, yeah. I can do only about like 5 or 6 in any given week to really read. I like some of the shorter ones, like even Simon Taylor's one on a Sunday, and This Week in FinTech as well comes out on a Monday. Like, it gives me a kind of overview of the week. It's the short kind of updates on some of the top kind of funding and stuff like that. It keeps me on top of things anyway.
Absolutely, I gotcha. You got one you wanted to start us off with this week on SoFi, yeah?
Yeah, so SoFi obviously started out as a student loan business. Interesting because I remember we were talking about Lending Club a while back and how they had become a bank and how that added so much value to their business in terms of cost savings and everything else. And SoFi have made a number of deals, a number of acquisitions in the last 6 to 12 months, which has really kind of totally revamped their business. And the one that they announced on the 22nd was an all-stock deal where they're paying about $1.1 billion for a banking software company called Technisys, which does obviously banking as a service solutions. It's an interesting one because obviously it allows now SoFi to offer kind of personalized financial services to its banking customers. And then obviously the current customers of Technisys can get access to the solutions of SoFi. Mm-hmm. So it's very much gone beyond a student loan company and to now be able to do anything. It started out in 2011, student loan refinancing, now does mortgages, personal loans, credit cards and investing. Only 3 weeks ago, it closed a $750 million acquisition of Golden Pacific Bank, which is a California bank, which ultimately was buying in a customer base to be able to offer automated savings and a kind of checking and savings account. It's following in the footsteps of Lending Club and Square and some of the others that have got banking charters or folded banks into their operations. And I mean, last year even it acquired a financial infrastructure firm called Galileo Financial Technologies for $1.2 billion.
Yep.
So it's kind of mopping up a number of different companies in the space, but on the infrastructure side, moving way beyond obviously where it started out, but really turning into an infrastructure player. So it's interesting. I thought it was an interesting one relative to everything we talked about on some of the other companies like Square and like Revolut and Monzo and stuff. So
yeah, this one I've been tracking SoFi for a while because SoFi, Betterment, Wealthfront, some of these more Lending kind Club. Of financial supermarket type digital plays. Lending Club, absolutely, that we've been looking at. Obviously, our friend Shamath is an investor in SoFi, and they were one of the first out of Betterment, Wealthfront, SoFi to actually provide crypto. And they've now enabled investing in 30 different tokens. So always a fan of what they're doing, and the piece said in payments.com that they previously had been running all of their tech, all of their ops on this old legacy stack that they had for most of the business. And then the card business was on another one. And this lets them do everything. But also then, like you said, lets them do this as a banking as a service type play or a white label play for the overall Technisys kit that they're acquiring. It's a big acquisition.
But yeah,
so,
absolutely.
But in any of these situations where you're this far along on your funding journey and you're saying, we've bought Technisys, we're going to use this as more than just an asset to sell itself, right?
Yep.
Sell its software. We're actually going to re-platform out of their old kit and onto Technisys, which is going to be a big deal. And it's going to be a big deal, huge job, project for them to undertake. It's not going to be,
because I think that they're projecting it's going to add about 800 million in revenue in the next 3 years and create about 85 million in savings. So like there's a load of reasons, like you said there, it's replacing SoFi's legacy technology, which is obviously good for them. But then having acquired the bank and the banking license last year, and being able to reverse then a lot of the solutions into that bank and its customer base, they're a very different kind of operation then by embedding this solution.
And then because they've done this, and just thinking about Starling, who we talk about a lot, that they started off as a consumer challenger bank or digital bank, and then moved quickly up the curve to SMEs, and are now doing banking as a service. SoFi has obviously been a consumer bank. They will be doing banking as a service or white label. But what does this mean? They're going to do SME banking now as well, or SME services, and take on a Brex perhaps.
Well, do you know what? The interesting thing, and I always pay attention to these ones because obviously my background or the main enjoyable part of my career was in future finance doing student lending. It's the most enjoyable
Tell
part.
me how you really feel.
Yeah. No, do you know what? I like investing in companies.
Yes, absolutely.
Just not the bureaucracy. What I always found fascinating with future finance, and we were early on our journey, like obviously we've had Brian on the show, Brian Norton, the founder, was the opportunity when you have the sticky customer. So we were giving loans to students going to university, and this was in 2000 and God, I can't remember now, 13, 14 or so. So it was still early days in terms of digital banks. But where we missed the boat was that we had the customer base, and we had them checking in and making a payment every month, a repayment. And, that was incredibly valuable. In fact, one of the last things I kind of proposed before I moved, I left and went to Deutsche Bank then was, I thought we should start opening up the account part, like their online account where they go in to check their balance, make their payment, and start offering more kind of functionality to that on the basis that we have these customers. And you see, obviously, SoFi is taking that to the extreme in the sense that they've obviously built up a very well-known and well-funded student loan refinancing, but it gives them the opportunity then to become that bank for those customers, and
totally.
they have them with the loans already. And now they're able to, what are they saying? They'll be able to bring out mobile banking apps, deposit accounts, checking and savings, obviously through Golden Pacific. So all of a sudden they have every kind of banking offer available to even their current customers, who are all students that'll continue to kind of grow with them as a customer.
Well, they got a big product base now. I mean, they have loans for obviously student loans, as you mentioned. For refinancing, but also just initiating private loans,
mortgages,
personal loans, credit card, family planning, travel, wedding, home loans, investing active, automated, IPO, fractional, ETFs, crypto.
But that's it. They're a fully functioning bank.
Relay financial insights, their credit score monitoring, and some business solutions. SoFi at Work and small business financing. Yeah, so they're going in that direction anyway. Like we said, towards SME. If you put this on this side of the pond in Europe and you supercharge it with open banking, now I know everybody connects with Plaid in the US, but it's not yet a regulated framework that makes it possible for people to play by one set of rules when they're sharing data, or you're allowing your own data to be shared with third parties like you have with open banking through PSD2. Now that hasn't gone perfectly and all swimmingly, as we know, but there's a right way to do it. So if you supercharged that SoFi offering now with that Technisys acquisition to shore up their tech stack, you put it in Europe, that could do a lot So,
Well, it's automatically a big player then.
let's call the leaders of SoFi and tell them we'll help them get into Europe. Yeah.
Yeah, or let's see if you know what, I'll tweet one of them and see if we can get them on the show. Talk about it a bit more.
Exactly. They're
That's worked so far.
they're looking at a whole bunch of different regulatory authorizations they want to come play in Europe. But you know, you got a European banking license like Revolut have in Lithuania. You've got payment services directive. You've got AISP, and are they getting into MiFID? A little bit.
They would, yeah.
Yep, or an AIFMD or a UCITS management company, all that type of stuff. So there's.
Tell me this: what's because obviously we talked about these guys. We talked about Lending Club. Why haven't any of the European equivalents gone down the acquisition route? Because there's 3 acquisitions in the last 18 months for SoFi nearly 18 months that's put them in this position now. Like why aren't the Revolut doing it?
You know what? I was looking at the Revolut app the other day, and that part of the app that I don't look at all that often, which is the squares down at the bottom, right? And guess what that's starting to look like?
What?
WeChat. With all their mini applets in there.
Oh, I'm going to look at it now when you're telling me that.
Have a quick look. And if you look at it, so they've got accounts, they've got essentials with cards, bills, donations, shopper, schedules, credit with loans now.
Oh, yeah, see that.
Stock, commodities, crypto vaults, rewards, travel, insurance,
That's your hub. That's where everything is going to be, yeah.
And we talk through the Walmart strategy with what could they include in a super app. And it's like Revolut are kind of already getting there. So I think Revolut are like, screw it, we're just going to build this ourselves rather than go out on an acquisition path and deal with that integration and deal with all these different tech stacks that they have to knit together into a bird's nest.
Is it a mindset thing as well, though? Because obviously, Revolut have raised a lot of money, but obviously you compare that with SoFi, it would probably raise multiples of what Revolut have raised. It's very much, is it an American kind of mindset to go out and buy whatever it is you need, raise loads of money and go buy it?
Yeah. Definitely.
Not to generalize the entire nation.
I had that problem for a while. If I needed something, I'd just go and buy it. And I ended up with way too much junk.
It just seems strange, like, acquiring a bank. Like, why hasn't anyone else acquired a bank to get your license that way?
I don't know. In the US, you're saying?
No, in like, why haven't one of the European players acquired a bank, even a small bank, to get their license and to get access to something that they need?
Well, because it's hard, because you need to then pass muster in Washington to get your regulatory approval for a change in beneficial owner of a banking license.
So it's the regulatory challenge more than anything.
Yeah. MoneyGram was in a bank, and what was it? Ant Financial tried to buy MoneyGram, and that got blocked because for competitive reasons. So, now that was a completely different kettle of fish, but you got to go through that regulatory approval process. So,
look, I just thought that was an interesting one. It's not a name we'd necessarily talk about a lot, but I have been keeping an eye on them, and it's a really interesting acquisition for them.
Absolutely. In a similar country, or in the same country, United States of America, we've got stablecoin provider Circle, which is actually part of the Center Consortium with Coinbase and a few others as well. It's a $9 billion valuation after a new SPAC deal. My mom sent me a email with a link to something about SPACs. And I said, thanks, Mom, for sharing. Not only is it informative, but it's also just fun to say SPAC. SPAC, right? So
that's it.
She hasn't replied on that one yet. We'll see what she says. But I was really interested in this one because just my continuing fascination, and not even fascination, but just understanding of the stablecoin model and how it works. Yeah. And we've talked about stablecoins before. They are cryptocurrencies that are pegged 1-to-1 to a fiat currency, and 99% of that is to the US dollar. But the way they operate in the background is very much like a money market fund or a cash fund. Do you know how those work?
Not really.
Yeah. Someone contributes $1 million, and then the fund manager goes out and buys $1 million worth of cash-like instruments. So cash equivalents are defined as things like certificates of deposits, U.S. treasuries, short-term receivables that get sold on. And so 61% of USDC the stablecoin, is backed by cash or cash equivalents. The rest are other types of instruments that you could typically find in a money market fund. So it is just a big money market fund where instead of issuing shares, what's issued are these tokens that are then fungible. You can't take shares of a money market fund and then go sell on those shares in a secondary market. But when you buy a stable coin, you are in effect taking something with you into your virtual wallet that you can then use to buy other things with, to buy cryptocurrencies, or even use to settle transactions on your Visa card. And we talked about that as well last time.
Yeah. Okay.
So what Circle are doing is that they announced new terms with a special purpose acquisition corporation, or SPAC, the Concord Acquisition Corp. And this was back on the 17th of February, towards the end of last week. And as everyone knows, a SPAC is sometimes called a blank check company. You raise capital through an IPO with the intent of acquiring or merging with an existing firm and taking it public. In this case, it's obviously Circle. And that values the stablecoin provider at $4.5 billion back in July, but now it bumped up to $9 billion. So what this means is that Circle is going to go public. There's lots of regulatory bubblings going on in the US right now saying that if you are issuing stable coins, you are kind of a quasi bank. Now, they're not going to go so far as to say you're a money market fund because you're not shareholders. You don't actually have any claim on anything. It is just you've willingly accepted that you have been issued this stable coin, this USDC, pegged to the US dollar in return for whatever your cash consideration is. So I think it's one of the other big thing that they are doing, that Circle are doing, and this may melt your brain a little bit, but USDC is primarily issued on the Ethereum blockchain, but now Circle have enabled USDC as a stablecoin to live on a bunch of other blockchains as well, like Solana and a number of others that are kind of, not that they're challenging Ethereum. Well, to an extent, some of them are challenging Ethereum, but I've always said, and I've shared this with people before, there will be no one single blockchain to rule them all. It's a multi-chain present and future that we're headed towards. And we used to talk about years ago, the smart money is going to go, bridge between all these different blockchains. There are so many bridges out there right now, and it's still a big part of the industry that is developing. But anyway, this was just more of an update on what's going on with Circle. Given that we've talked about stablecoins in the past, given that we've talked about USDC, which is Circle's stablecoin as part of the Centric Consortium, and continuing to see more and more and more connectivity and integration with consumer spending options that are happening with stablecoin.
And maybe maybe I'm getting this wrong, but maybe stablecoins are the way to, or the right mechanism to, go between your kind of virtual world and your real world. When we were talking about Fortnite and your in-game currency and stuff, maybe stablecoins are the way to do that, because obviously they're pegged to something on the outside, something that has a real kind of tangible value to it. Would stablecoins seem like they'd be a better solution than a Bitcoin at the moment?
It all depends,
because they're pegged to that value.
It all depends on your point of view and where do you want to live in the, not where do you want your value, your wealth to live in the virtual world? Are you comfortable if you've earned if you've paid some cash in to a game and you've earned credits in that game and points in the game that are then tokenized, that you can then offboard into your virtual wallet? You could leave it in those tokens, which will fluctuate. SLP, which is Smooth Love Potion, which is the cryptocurrency, the in-game asset used in Axie Infinity. Right. That could sit in your wallet, and that's gonna fluctuate. You could immediately convert that to USDC. You may pay some gas fees depending upon what wallet you're holding in and what chain you're operating on. But yes, so there is a very large concept that I am pursuing on a number of different fronts, which is these risk-off asset classes in crypto. So say I was a crypto whale with a significant amount of crypto wealth, and I wanted to offboard that for a period of time where there was a lot of volatility. I wanted to take some profits. Where am I going to stash that? Am I going to stash that in USDC in a stablecoin? I could, but I'm not going to earn anything on that, or I'll earn very little. Yeah. Right? You could pair the USDC with some Ethereum and go into a DeFi liquidity pool. I'm not even going to go into what that is, right? But you're back in because you're riding the volatility on Ethereum. or any other crypto that you pair with USDC. So are there other asset classes that can use the same stablecoin model? And I'm, again, number of conversations, number of things I'm working on that front is pointing to
Yeah, and I
yes,
suppose
I think that's the direction this is going.
like to use your term, you're way further down the wormhole than I am. So
Exactly.
I'm still definitely one foot still in the more traditional world. But even to me, like I can understand the model whereby something like a stablecoin or USDC would make sense to convert a virtual currency out then into something real and tangible. And it doesn't seem like that far of a leap for people or investors or new businesses or whatever to understand.
Wait, do you know what fiat actually means?
No.
Yeah, I didn't either until I Googled it like 2 years ago.
Oh, that's all right.
A fiat currency. Why it's called fiat is fiat means because somebody said so, right? So a fiat currency has value only because somebody said it does.
Okay.
So if you're prickling at some pins there by saying that moving to something that has some tangible real world value. Now, of course, the majority of the world, because there's only 100 billion crypto users on this planet right now, out of the 8 billion people on the planet, will look at that and agree with exactly your sentiment. You're exactly the types of words that you're using to describe it. There will be some crypto natives, though, that will say, well, what is actually tangible in this world anymore? Yeah. Fiat currency to most people is, but to a lot of crypto natives, it's not. And that they might be more comfortable being in Bitcoin or Ethereum. But I think to your point, if we're looking at going from 200 million, even to 1 billion, we need some more options for people. If they're going to get in some type of algorithmic trading strategy around the top 10 crypto coins to invest in, which there are, some real up and comers in that space, and they want to take some profits and they want to risk off, you got to give them something better than just USDC to put their money into.
Yeah, that's fair enough.
And if you are pulling money out of a game like Axie Infinity or Fortnite open this up, you need something better to put it in than just USDC. Because if you want, like I said, go through this process that exists right now, that's a bit of a clunky process to get into, to put that to work and earn some yield, you need some people to hold your hand for that. So long way to go.
Yeah, absolutely.
But no, thank you for entertaining my thoughts.
No, I love our conversations on the crypto space because I'm less of a skeptic, but I'm not on the other side of the fence yet. I see the opportunities, obviously, but I just think we're still a good bit down the road, good bit still to go in terms of more widespread adoption and more widespread opportunities, companies, different stuff that's being built. So let's see.
Yeah,
I'm learning every time we chat. I learn something new, so it's good.
Hey everyone, this is Pete. Let me tell you about the folks at Philip Lee. A few years ago, I was at my first venture capital industry dinner in Dublin, and honestly, I felt a bit lost. I bumped into Andrew Tizali, one of the partners at Philip Lee. He bought me a pint and introduced me to the team, and they took me under their wing. That take you under their wing approach has been what I've heard consistently from fintech and crypto startups who I know have worked with Philip Lee in Dublin and London to help them wrap the right legal framework around their business, fundraising, and regulatory needs. And I can't recommend them enough. Get in touch with the team at philiplee.ie or on moneyneversleeps.ie/Philip Lee to learn more.
Speaking of crypto, did you see all the crypto Super Bowl ads?
I saw a hilarious tweet thread yesterday from the CEO of Coinbase because I saw how well their kind of QR code did. It's fascinating to see, like it's completely taken over. I saw an interesting Twitter comment from someone fairly well known in the fintech space. I'd have to look it up again. I can't find it. But their question was, would we be coming down hard on celebrities and things like that if they were out like pushing personal loans on people back in 2007? In the same way that they're out there pushing NFTs on people. And I thought it was a fair comment because it has a bit of a feel of that to it. Like it's everywhere now, and especially on the NFT side, and you can't really sort through the good projects from the bullshit ones. But yeah, I mean, it's definitely turned because obviously all the sponsorships, especially in the US, that have crypto kind of behind them and everything now, it's really taken over and become a lot more mainstream over there.
Yeah, well, there's just so much money. There's so much wealth in in those platforms that if you want to acquire, it's the first billion users, right? Who's going to be the first to 1 billion? Now, you may not get to 1 billion like Facebook. or Facebook 2.5 billion.
Yeah.
A quarter of the planet. But what is going to be the trigger point where, and people talk about NFTs and people talk about why was the summer of NFTs last year versus the summer of DeFi or decentralized finance a year before?
Yeah.
Why was the summer of NFTs that much bigger? Because more people are interested in culture than finance.
Yeah.
Right. So is this going to be the key that unlocks it? Now, you still need to get past that rhetoric around I am paying, there are people paying $1 million for a JPEG,
Yeah.
but there are people that are paying $1 million for a piece of art that you can take a picture of. And, it's where do you live? You live in the virtual world. Do you spend most of your time in your virtual world where you've got your picture that you've bought that is proved to be the one and only copy of that? Well, that's just it. The word copy. You've got your picture that you've bought, the photo that you've bought, the painting, the Bored Ape, the whatever, the CryptoPunk that is yours, that you own. And that's the only one that's been issued. And you put that up on your space in Realm, like we talked to Matt Larby, right? The microverse, where you can build your own space and have your NFTs up on the wall and invite people to come. And when you get more footfall in your space, you earn tokens, right? So, and if you are spending more and more of your free time in these spaces, then rather than inviting people over your house to look at the Mona Lisa up on your wall, not the Mona Lisa up on your wall, or going to the Louvre to check out the Mona Lisa.
Yeah.
Did you see? Have you ever been to Paris to see the Mona Lisa?
I have been to the Louvre, and the queue was so long that we just abandoned seeing the Mona Lisa in the end.
Yeah.
So yeah,
it was kind of like, okay, that's it. It's kind of small.
Underwhelming in some ways, given the build-up.
You wish. Was it Van Gogh or Da Vinci? It was Van Gogh, wasn't it?
No, it's Da Vinci.
It was Da Vinci. Okay.
Yeah.
You wish Da Vinci had a bigger canvas when he painted the Mona Lisa for all that
one.
it is.
Yeah.
But anyway,
do you know what?
I'm not going to drag traditional art through the mud here in favor of JPEG.
No.
So, but.
What I think is interesting, and because obviously you see it with all the sponsorships of the arenas and the Crypto.com arena for the basketball and all the sponsorship from FTX and stuff in LA. Yeah, and I know Man United just signed a new shirt sponsorship with some sort of crypto company. What I wouldn't be doing if I was any of those businesses would be entering into like a 10-year commitment with any of these. Because it seems like exactly the type of thing whereby, you've signed a 10-year sponsorship with whoever, Crypto.com, and I'm just using them as an example. I don't know much about them. And, 3 years later, they don't exist, sort of thing. There feels like there's an element of that to a number of these companies that are out there kind of sponsoring and pushing.
Well, of course. Do you know my beloved Boston Garden?
Yeah.
Right? That was originally the Shawmut Center, which was a bank in Massachusetts. Sorry. We had the original Boston Garden, and then they built a new one. And when they opened it up, they didn't call it the Boston Garden. They called it the Shawmut Center because Shawmut was a big bank in Massachusetts that was sponsoring and got the naming rights, right?
Yeah.
And then a few months later, before it even opened, Bank Boston bought Shawmut. So before it even opened, it became the Bank Boston Center.
Yeah.
And then a couple years later, Fleet Bank bought Bank Boston, and it became the Fleet Center.
Yeah.
And then TD Bank North bought Fleet Bank, and then it became the TD Bank North Garden, right? And at least now they've changed it back to the TD Bank North Garden or the TD Garden or the Bank North Garden. I don't even know what the hell it is anymore. That's happened over the last 20 years.
Yeah.
So, if Binance or some other crypto player buys Crypto.com or some bank, dare I say, buys Crypto.com, then what was the Staples Center, which is now the Crypto.com arena, will become that.
That anyway. Yeah.
Whatever. So it's the circle of life.
Need that music in the background now.
We do. Where's Elton when you need him?
Yeah. Cool.
All right. Anything else going on you wanted to highlight?
Yes, I had one more, which I thought was interesting. It's a bit older news. I think it was from the 10th of February it got announced. It was Apple and Stripe's kind of connection, integration, whatever you want to call it.
I like this one.
Yeah, I mean, it's fascinating because obviously they're going down the Square kind of route a lot more. And ultimately, it's allowing your phone to become a payment terminal, which to me is a big kind of, in your face to the likes of Square or Block as they're known, because they're really coming after their space. what I thought was really interesting was David Birch had, who's a big kind of well-known guy in the fintech space, had an article on Forbes on the 10th of February, From Apple Pay to Apple Paid, where he's really saying that, if you look at this and think it's about point of sale devices, you're missing the point, and it's about way more than that. He refers to Apple as playing contactless chess, and I thought it was really interesting, and I got the understanding of what he meant because I sent the article on to our friends in Strike Technology, Ollie and Charles, specifically to talk about it. Because obviously they don't have, there's no bank account required for what they're doing. It's tapping your phone to tip your driver. Or the person dropping your deliveries, that sort of thing. So, on the surface of it, it feels like obviously just making your Apple phone need a point of sale solution, and you don't need to have a dongle or anything like that to connect into. However, David Birch's view is that this is all about identity ultimately. That it's about, if everything is on your phone and your identity is on your phone, then that's how you'll kind of interact. And, what else did he say? Because a lot of this ties back into Apple made an acquisition of a Canadian company called MobiWave, which made soft POS solutions. And they'd integrate this. So they've integrated that, and with NFC and everything, that they'll be able to offer this soft point of sale services business customers. Obviously, it gets rid of the need for the terminal, which is great.
But who is the ID side on? Is it the consumer that's buying something, or is it the merchant themselves? So who benefits there? Having a payment terminal embedded into a smartphone means that you can leverage other apps and other functionality and APIs into other apps on the phone that may be related to, you can identify who this person is, or you could say, listen, I get a 5% discount off of this if I share my demographic information with you on this purchase.
Yeah. And I think do you remember when we were talking about Square, and I can't remember what specifically they did, but it was integrating their business and their consumer facing businesses to ultimately mean you're removing the bank from the situation. Obviously, Apple's going down that route on the merchant side. I know myself, I would have told you, my wife took over a coffee shop, a local coffee shop there recently. She owns and runs a coffee shop now, and we have SumUp is our point of sale solution. And it's fine, it's straightforward, it's all pretty much all cashless. But I don't get much else other than the fact that it's there, it's easy to use, and the fees are not massive in terms of using it. But I don't get much else in terms of integration or ability to do much more with it. Whereas obviously, you're then again removing the bank out of the situation here by I can go in and use Apple Pay on my phone to pay your Apple, or in our shop, if we had this, obviously I can pay my Apple Pay on my phone to pay your Apple phone and buy the coffee, and it keeps all that between it. Because there's 500 million Apple Pay users worldwide. And then what else are they saying? There's only around 1 in 20 kind of people using it at the moment. But it's probably because they don't get anything more out, or hadn't been getting anything more out of it, or hadn't got the ability to combine like your payment solution with loyalty or coupons or any of that sort of stuff that people would be doing by themselves. But this sort of integration now allows them to do that.
Okay. So we were talking about Starling again, a little while back about, and you suggested, well, if Starling are doing that much more on the small business side, and you walk into a cafe to get your coffee where you have Starling as providing the banking services for that cafe, and you have a Starling account, and you can just go tap something with your phone in that cafe and do an account to account transfer rather than going through the credit card and the payment networks. It's just account to account that happens, just like when you're scanning a QR code with your crypto wallet and it moves instantaneously. You can do that. And so if Apple are going in this direction, then instead of just, hey, Starling could do this, you could do this for anything. So
and that's
if the merchant themselves have some type of financial account set up, well, that's where this is going, right? Are Apple providing financial accounts here, or are they just providing a means through Stripe to get into the merchant's bank account?
And that's it. Right. It's a play on the merchants here ultimately, because what they're saying is, and I love the term Dave Birch uses where he says Apple are playing contactless chess and are a few moves ahead right now. So this is their way to go around having to use card rails. So whoever you go into the shop, what did it say here? So you go in, it's all about ultimately identity for Apple. So it's Apple knowing that the merchant, me in this scenario, has requested a payment and you want to complete it. And we know that because both of the transactions happen across Apple Pay, and then it makes it a lot easier. Then he's saying, it becomes just a case of updating some spreadsheets or ledgers in this scenario. And that it gives it a way of avoiding kind of payments fraud, things like fraud in the payment space, because obviously my phone is linked to my identity and your phone is linked to your identity. On the other side, there's no one can alter, like it's less of a chance that someone can take my card and go use it if I'm using my phone for everything.
It's this, but the play for Apple specifically by getting into the merchant side, that you look at a Square / Block that are doing this, and it's clear that it's beneficial to their entire ecosystem if they're providing both merchant services and consumer services, which they're doing with their core Square tech, but also then on the Cash App side, right? And integrating all that together. Wonderful. And the more information and data they have, the more they're able to promote both. Apple aren't providing any merchant services or paid merchant services here. Now, maybe you have to pay something in order to hook into this with Stripe, but and is there a transaction fee that Apple are charging? Now, Apple themselves are not a financial entity, and I think that line is obviously blurring and has been blurring for the last X number of years. And you start thinking about embedded finance into Apple and all these wonderful conversations you could have. Yep. But it's like, how will Apple actually be able, because it's a data play, right?
Yeah.
Great, you can earn some money off the transactions, but it's having the data. And does that data then allow you to offer more kinds of apps, to do some more native Apple apps that are gathering data about usage and demographics and sell more Apple products?
And it's that bit exactly, but it's in a more kind of consumer focused and privacy focused, obviously, which is Apple's kind of priority area over the last number of years. So the example Dave Birch uses here is he talks about going to like a farmer's market and buying organic honey from a stand. And, the lady holds out her iPhone, he taps it with his iPhone, and Apple provides a payment token on both sides to complete the transaction. So the seller gets obviously their payment and a unique identifier, which they can then send on to that person. However, they don't necessarily have to get your name and contact details. Mm-hmm. They have what is effectively an alias address. So they get your information to allow to send you personalized information and offers and services and stuff like that, without knowing who you are and without you having to worry that Apple knows that you're Pete and you live in wherever. That could be that privacy piece, and being able to share the data while keeping it private could be a very interesting element to it.
Well, there's a strong element of crypto in where you are able to confirm that you are actually somebody who has been validated by another party that you are who you say you are, without actually confirming your identity, so that you are a trusted, individual, trusted source. But I won't go down that rabbit hole. But is this some of the ideals of Web3 and ideals of Web2 kind of
combining,
colliding here a bit?
Yeah.
I could see this happening.
So that one kind of jumped out. Like the story itself, obviously, they're moving more into Squarespace, and it's obviously good for business, and really good for Stripe as well. But it's when you look beyond it and look at it in this angle, it's actually, what does this mean in the future from a data point of view and a privacy point of view? So a lot more to happen there, but it was an interesting one anyway.
Absolutely. I think these, the top 100 hypotheses, or call them predictions, call them, hey, this could happen in the future. I think those need to be collated through the last 173 episodes that we've done. And I was also thinking, now that I've gotten back to naming the episodes after hip hop tracks, it was last week that talking to Adam Bialy, and we called that one Mainstream, because his vision is for crypto to go mainstream, is to help crypto go mainstream through what they're doing with Fiat Republic. And Mainstream was a song from the 90s by Outkast. So that was pretty cool. But now that we've gone back to doing that after, last fall, where we were doing it a little bit differently, it's, I think there's a playlist waiting to happen.
Oh, there is. No, absolutely. It's on my long to-do list that I never get around to, but yes, right, I will get around to that soon.
Yeah. And we'll see it on Spotify.
Yeah, actually, Joe, I have a few days off. I'm going to try to get that done this week. It needs
to go up on Audius, which is the Web3
fair
Spotify.
Enough.
So.
Version of Spotify. Fair enough.
But also token tracks. I met Tommy D yesterday for the first time in Dogpatch Labs, going far beyond what Audius are doing. And again, another rabbit hole I won't get down on this episode. But shout out to Tommy D and Brian Elders who introduced me to him. He's a great guy.
Cool.
Great story to tell. I highly recommend people check out Token Tracks. I'll put the link into the show notes.
Brilliant.
All right.
Cool. That was it. That was it for me this week.
Yeah, me too. We'll leave it there.
Pleasure as always.
Absolutely. Be well.
You too.
Adios. That does it for this week, folks. You can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. So check us out online and subscribe to our Money Never Sleeps newsletter as well. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor and advisor focused on where fintech meets crypto and crypto meets Web3. If you'd like to talk to me about your business, drop me a line on info@moneyneversleeps.ie. Finally, till next time, thanks for listening. See ya!